Hello, everyone. I hope you all are doing really, really well and preparing well for your ACCA examination, which is going to come ahead. Well, I'm coming up with these sessions. Now, I'm going to come up with 21-day sessions for the performance management paper 5 for you students who are upcoming for their June attempt, or if suppose you're watching it for your next window, it depends on which window you're going to give your examination. So today is 5th, 5th. As you can see in here, it's when I'll be sharing the screen and getting started with the class, you can see that today's date is 5th May, being the 5th month, and we are doing the 5th paper of ACCA. So these classes will go on a regular basis for 21 days. Now, what would be there in these sessions basically is we'll be going through the concepts of performance management. We'll be going through the test your understandings of performance management. Then also we'll try to cover up maximum exam kit, whether it is Kaplan, BPP, we'll try covering it. And then we'll also be looking into the technical articles of performance management, relevant technical articles we'll be going through. All in all, we'll try covering everything what is required for the performance management examination. So what you need to do is nothing but follow these steps. If suppose you have booked your examination for performance management and your preparation is going haywire and you are not able to have a proper map on how you need to complete it and how you need to do that, then what you need to do is come join with me, study with me for your performance management examination for the upcoming attempt. Make sure that you follow all the things which are said in the session. And if suppose you have any suggestions or if suppose you have any feedback or something like that, then I'm always welcome. You guys need to come back to me at any time. I'll also be, yeah, you are see watching this on YouTube. I'm uploading it on YouTube. This is one of a time I'm going to do that. So this is the benefit for the benefit of all. I'll be making sure that these classes have, whatever is required. What I say, whatever is required for for you to pass the examination of performance management will be uploaded on this YouTube channel and also on our application backend. It will be available on our application also. So those who have not installed the application can install the application. And also we'll try going through some mock examinations also after we are done with the preparation. It's also not only with, going through that 100-mark mock examination, we'll also go with, 20-mark questions. We'll go with, comprehensive questions of, 15 questions, case studies. We'll try covering up in these classes. So it's going to take 21 days. 21 days. Today is 5th of May. In 21 days, you will be done with the sessions, concepts, and test your understandings, exam kit, everything what's required. Now, this is for those students who have already, are doing their preparation and all. If suppose you, in fact, right now there's no option also to book the examination. So this is for you students who have already booked the examination. Make sure that you follow what is said in this and also share this with your ACCA friends who are doing it. That will be great help. All right. So now let's get into the content part. All right. So as you can see in here that I have opened up my or the Excel sheet, or you can say the Google sheet here at the right, and termed it as performance management latest. So those who are going to do this, you guys can share your email IDs with me so that I can share this document with you, because I'll be solving problems on this Excel sheet. And if there is any notes to be taken on, I'll be putting it on OneNote. And in short, I'll also be, putting some drawings on the PDF document itself of performance management. This is the Kaplan material. If you have it, very good. If not, then you guys can reach out to me for that. All right. So as you can see in here with the content, let me just zoom in so that you guys can have a look at it. The content starts up with the revision of management accounting topics. Now, in this performance management, you need to have strong basics of management accounting, which is the second paper of ACCA. Now, here, what happens in this paper, you build on that foundation, and then later on you get more complex problems from which you used to get it from your management accounting, which is your second paper of ACCA. Now moving forward, you also get into, as you can see in here, that information technologies and systems. Let me just highlight that for you, information technology systems for organizations for performance assessment, for organizational performance. It's more of understanding the use of IT in structuring organizations and building organizations. All right. And how it is very much important for you as management accountants, for you as ACCS to collaborate with IT industry and make something which is growing for the organization in whichever you're working for, or suppose if you have it of your own. All right. So now, system information systems, data analytics. This is also now the data analytics you would be hearing of. Now, this is also off the record also to understand that data analytics is also very important for you for your career, not only for just passing this examination. It is also important for your career. I'll be going through in in a more broad manner while we go towards data analytics, so that you guys have an understanding of it, and also business profiles like business analyst is a profile which is booming right now, and which you can also do it, provided you have some skill set of data analytics. You would be doing, you can get a better job tomorrow. And with the information systems, it's more of using an ERP in the right manner. Well, we will go on to the details of the topics, overviews of the topic as and when we go towards the sections of it. Right now, what we'll do is we will get started with chapter one, which is revision of management accounting topics. As and when, now understand this, in this particular session, I will not be focusing on doing test your understandings. The very next session, we will be doing test your understandings. In this session, what we'll do is nothing but we'll go through an overview of this topic. You also need to understand this topic with an overview, and then you need to go ahead and solve the test your understandings. Once you solve the test your understandings, in the next session when we are going to start, which is nothing but the day two, or suppose in day one only, I'll be just splitting that video, in which I'll not be putting the answers, means the answers I'll not put in this video. I'll be splitting it off and putting it in the next video, so that you try your understanding. First you test your understanding, and then come on and see that why what went wrong. Anyhow, the answers are there at the end of the chapter always. But while I'm solving those answers, I'll be doing it on Excel, because your examination is also on Excel. And also how you need to do it, how you need to frame it, how you need to structure it, I'll be explaining that too. All right. So without further ado, I hope that I have shared a lot of content, and I hope that that's going to be helpful for you all to do this performance management for your upcoming examination, whether it is in June, September, December. It's up to you when you write the examination. So now, as we get started, I'm telling you, we are going to go with an overview understanding about it. Now, what is the purpose of management accounting? There is a lot of content which is written down in there. I'll be explaining the most important things for you in the most maximum examples which I can give in this manner. I'll be giving that. So now let's just get started. You can see in here we are going to talk about the standard costing. We are going to talk about the traditional costing. I hope that you guys remember these terms from the previous management accounting sessions. If you have come in from exemptions, and you're looking at these terms as new, then my friend, you need to go towards the previous sessions of management accounting, and also that you get more strong basics, because these topics which were already done in management accounting, it took few chapters to be completed. Here it is just a revision in this one particular chapter. Now, what is the purpose of costing? What you need to understand, let me just sit back and explain you what's the purpose of costing, and why you need to have this costing in place. Now, in financial accounting, what you do is nothing but you do sales, purchases. You do, the finished good is coming towards you in financial accounting. What you're doing is you're recording it as a sale, you're purchasing it, you're selling it, fine enough. But what's happening in costing? Why are you doing this management accounting costing? Is that whatever product you are manufacturing, whatever product you are manufacturing it, or suppose you are purchasing material, processing it, and then making into a finished product, this requires costing. Now, what is the cost of getting that material? What is the costing of converting that material into a finished good? This complete cost becomes the cost of the product. Now, when you have got the cost of the product, what you do is nothing but you add a margin to it, add a margin, a profit margin to it. Now, when you add a profit margin to it, then you sell it in the then you sell it in the market. I hope you guys are getting it. Now, costing it. Now, how can you get this costing of a product? Where is it going to be used for you? Is a bigger time question. Now, suppose I have to launch that. What would be the cost of this particular pen? What is the cost of this particular pen? And I hope that you guys are able to see this. Now, this is a pen which is used on the Wacom board. What is the cost of this pen? The cost would be from where do I need to get it? What is the cost of the material for it, first of all? Then would be what is the cost I need to pay for the labor who is going to convert that material into this pen? And then would be how much would be my cost levied to get this pen to the market and to be sold? These all cost I need to consider it in a real time factor. Like suppose when you have to make a mobile phone, when Steve Jobs wanted to have a revolutionary mobile phone when he launched it in 2007, which is nothing but the iPhone. At that time, what should be the cost of that product? They had immense research and development done behind it. In fact, around 1.5 to 2 years they researched about that what can be a smartphone, what can be a complete touch screen phone. They came up with that. All right, so now they came up with complete R&D. They saw that what can be the cost of this, what all costs are levied for it, and they made it. And we'll take on more examples upcoming in further. All right, I hope that you guys have got it. Then comes in standard costing. Now standard costing is something like you are fixing a standard cost of a product, that this it will take this much cost of it to make it. Like suppose if I'm manufacturing Toyota or any car as such in the middle range of which is economical enough, Toyota or you can say Maruti Suzuki. Now, what is the standard cost of making that car? Can you have a standard cost because cars will be made in batches? Yes, you can have a standard cost that this is the cost which it will be levied. What you can do later on is that okay, this is the cost, this is the standard which I've calculated. Later on, how much was the actual levied on making that car? You can do a comparison between the two. What is the standard cost, what is the actual cost, and then you can have a variance in between the two. I hope that you guys are getting it, and I hope that this is helpful for you. If yes, then you guys need to like and share this video too, and share it with your ACCA friends only. Don't just randomly share it with people. All right. Now, as you can see in here, what do they say? Control, planning, performance measurement, as at what I just said you, that how much is it going to be levied, the standard cost, how much it actually got, the actual variance you got it. Why you're calculating the variance is just to find out that it is not just to find out, is that you need to apply and impose control. If you just see it below, control you need to have so that the actual cost and the standard cost, what is the difference, why is the difference, you can investigate about it. Then with this planning you can make that how much goods I need to manufacture, how much I need to sell it. Further you can plan it accordingly. Then comes with performance measurement, that assess the performance, how is it going on. Inventory valuation, how much is the cost of the product, we can understand whether we are using the LIFO method or the FIFO method. And then it is also simplifying the accounting so that you have one cost as a standard and then take the variances out of it. All right. Now it is also suited in mass production. It is not suited for any car. Like suppose standard cost, I can say that what is the standard cost of a Toyota or a Maruti Suzuki, something like that. But I cannot say what is the standard cost for Rolls Royce. Why I cannot say why it is the standard cost of I cannot make a standard cost of Rolls Royce is because it is custom made. It is made towards the specifications of the customer. The customer says that I want my car like this, then the costing becomes separate for it. It is specific job based costing. It cannot be like a standard is there, everybody can use the standard for costing. For Rolls Royce, not there, everybody will have their own standards there. All right, now let's move on towards the topic of McDonaldization. Now let me just share with you a short story. In fact, you guys can go ahead and watch it on either it is on Amazon Prime or Netflix. The movie name is Founder. Now the movie name is Founder. I hope that you have already watched it also. If yes, because if you are there, if you were there in my management accounting sessions, I would have already said you to watch it. Now that movie is based on the story of McDonald's, that how it became McDonald's. Now let me just add on few things for the standardization of McDonald's. Now McDonald's were like they were a hotel since a long time, but how it became McDonald's, the brand, is nothing but, see what happened is, first they had drive-in restaurant first, and then later on they went on with many experiments. Now you guys can watch it in that movie. What I want to explain is that one day they sat down and saw that their sales, they had various products which were sold in their store, but their sales were amounting 78% of their sales were in Coca-Cola, hamburger, French fries. That's it. Coca-Cola, hamburger, French fries. So what did they do is nothing but they scrapped out all other things and focused on these three things only. Now, when they focused on these three things, what happened is they came up with the process that we are going to manufacture only these three things only, right? Okay, fine. We are going to manufacture these, or cook these three things only. What we can do is nothing but we can speed up the process. What we can do is nothing but we can speed up the process. Now, how can we do that? Is nothing but they went on towards the drawing table. Now, that drawing table was not possible at that time. They went on to a tennis court, and when they went to a tennis court, they drew the measurements of the kitchen which they are having. And then later on, what did they do is nothing but with lots of R&D, researching on it, they came in with a speedy system that when you cook it within seconds, it is ready for the customer, and that is always there because you have only three products which you need to concentrate on. So now they have custom made their kitchen ornaments also. Their kitchen ornaments are also custom made so that it is helpful for them to do that work. Now everything which is built on in there, it is in a standard way. Suppose if you have a hamburger over there, they'll have it in a proper counter, like how many pinches of pickle would be there, how many pinches of salt will be there, or salt sauces will be there. It depends. In fact, if you watch that movie, it is so beautifully explained also. Later on, what happens in the movie, that is another case, but this made it a standard. All right, and with that standard, that speedy system, that was theirs. And then later on, then Ray Kroc came in, and then they went on to franchising it. They lost control, all other things. We can discuss it once we come towards those franchising model discussions, and also it is also part of advanced performance management. We discuss over there about it too. But for now, it's just understanding that how they standardized the cost. All right. Uh, I hope that that is the same. Now, this test understanding, I'm not going to answer. Not again with the test understanding two, I'm not going to answer because I want you guys to do it. It will be important for you guys to try it out first because this is coming in from management accounting. Try these test understandings first. In the very next session, I'll be doing it for you, but try it. Please try it because it's your examination. You're going to give the examination. All right. If I was going to give the examination, I would have done it here. Then types of standards. One is the attainable standards, then comes the basic standards, and then is your current standards and your ideal standards. Now, how do you make these standards according to the organization? You need to understand that attainable standards are something which takes up, like, suppose I have to do your classes, suppose I have to do your performance management classes. What is the attainable standards? 1 hour in a day, 1.5 hour in a day, attainable. 24 hours in a day, that is ideal. But is it possible? No. If I do all 24 hours in a day, management accounting will be finished. But that's not possible because there will be break time, there will be downtime, there will be rest required. All these things will be coming into the picture. All right. I hope that you guys are getting it. So attainable standards is like you keep it with the understanding that okay, the employees will be motivated to do it. It must not be like the employees are demotivated, that anyhow he's telling us to do for this much time. It is not going to happen. Even if we do, it's not going to matter a lot. So leave it. Motivation will go down. But if suppose you keep that, okay, you have to work for 1.5 hour, 1 hour only, then that motivation will be there all the time. All right. So you need to keep those attainable things, like, okay, you have to manufacture these many units in this much time, which is attainable. Employee will be motivated. You need to manufacture that many units in this much time only, which is not attainable. Then the employee will not be motivated to it. And then comes the basic standards you can see in here. Long-term standards which remain unchanged over a period of time for basic years. For a period of years, it's nothing but the old standards which keep on coming in on a basic manner. Then comes the current standards. These are based on the current working conditions, somewhat relevant towards the attainable standards itself. And then comes the ideal standards, which I just said about that, do whatever you will not be able to achieve those ideal standards. Like suppose you have to work 24 hours in a day. You have to work 24 hours in a day. You cannot actually do that. That's not ideal enough. You have to take downtime. You have to take, this break, that break will come in between, right? I hope you guys are getting it. Now, preparing standard costs which allow for idle time and waste, which is nothing but the attainable standards. Then there is test your understanding 3. Now, this is actually very good problem. In fact, I want you guys to do it. After you do it, I'll 100% show you how you do it. I'll be doing these test your understanding. So with you, make sure that you do complete it at first, please. Now, flexible budgeting, understand this. What happens in flexible budgeting? Let me just put down the Excel sheet beside so that I can explain you in a much better manner. I hope that this screen, I've just squeezed it. Uh, just zoom in while you are watching. All right. So now fixed budget is something, or you can say static budget, which is something which is there permanent. And then comes the uh, flexed budget and the flexible budget. Now we'll talk about the flexed budget, and then there will be your actual. Now, what happens is, suppose I'm static enough, I'm having 10,000 units in sale. I have my sales to be, okay, why is the screen shaking? My sales are nothing but 10,000 into 10. My sales is 1 lakh. Then my variable cost is somewhere around 70,000. My profit, I'll just take it here itself as profit, or you can say gross profit for better understanding. My gross profit is 30,000 here. Now, what happens in the actual side is that I'm able to sell 12,000 units. My sales is somewhere around, let's take for an example, 110,000. All right, my sales are somewhere around 110,000. My variable cost is somewhere around 80,000. Suppose, let's just take it for this example, I'm taking it. Okay, then what's my gross profit here is again 30,000. Yes or no? Yes, sorry, this became 3 lakhs. 30,000 is my gross profit. Now the point here is, when I am comparing this static budget with the actual budget, there's no difference at all. There's no difference at all. But can you find the difference in there? I hope that yes, you can. The point is, you're comparing 10,000 units with the 12,000 units. The base of comparison is not right at all in here. All right. So what you need to do is nothing but get the right base. So to get that right base, what you do is nothing but, in the flexed budget, you take 12,000 units. Now, what is this 12,000 units? Is nothing but those units which are the actuals which are going to happen. But the sales values and all, what you need to do, this flexed budget should contain the budgeted values. Now, what is the budgeted values you need to see is nothing but this 12,000 should be multiplied with what is this amount, which is nothing, 1 lakh divided by 10,000, that is 10. So you need to multiply it with 10 again. Then but you need to multiply it with the budgeted values. Then you can see in here that your variable cost is $7 each, or 7 rupee each. What do I need to do is nothing but is equals to 12,000 multiplied by 7. How much it should have been? 84,000. So my variable cost here is actually less. Now, what is my gross profit, or you can say gross profit itself? What is my gross profit? Is 1,20,000 minus 84,000. My gross profit had to be how much? 36,000. But you are only 30,000. It means that there is a variance of 6,000. There's a variance of 6,000. Now this is possible when I'm creating this flexed budget. I can compare these two properly. All right. Then comes a flexible budget, as you guys can see in here. This is also prepared before the beginning of a budget period. It is prepared for a number of level of activities. It requires the analysis of cost and cost between the fixed and variable elements. So that is for a different scenario and for a different understanding. So let us just move on forward. Budgetary control, actual results matter. And now when the actual results matter, there will be variances, whether it is adverse or favorable. You need to go in depth and evaluate that why you have got a variance, first of all, whether it's adverse or favorable, that depends. But why you have got a variance, that is the question asked. That should be there. Now, then there is another question which is going on towards a flexible approach. Same, you guys need to do it in the next session. Next video will be on your test your understandings only. So make sure that you complete these test your understandings and come back to me, and we will be going further in it. So it will be a very good, session kind of thing which will be going on. In fact, if suppose you are watching this, what you can do is nothing but join into my WhatsApp group also to do these performance management. All right. So now controllability and the performance management, you can see in here there are few costs which are controllable. There are few costs which are not controllable. Let me just zoom this for you students so that you guys can see it clearly. Now, controllable, if a manager is responsible for it being incurred, that's controllable. And now, when you are having few costs which are controllable, what you can do is nothing but you can assign that controllable cost and see the performances. You can see the performances of managers. Now, a manager should only be evaluated on costs which are there in their control. It is worth emphasizing that this cost is controllable and is an important idea that will be revisited many times throughout this syllabus. Now, a manager, you can, in fact, we can go at this in the auditing concept also, that how a manager or, an organization, you can go through and see that why is these controllable costs not controlled properly, why the costs are going haywire. It's a big time problem, so the manager can be visited again on this point. We'll also be looking at in this in the upcoming syllabus too. Now there are few testing understandings again, 5 and 6. Again, you guys need to do it, and then we will be moving forward. Next comes traditional costing methods, absorption costing, and marginal costing. These are the two traditional costing methods. बहुत पुराने costing methods है ये. And the only difference between these two costing methods is the treatment of fixed cost. What it is the treatment of fixed cost is the difference between the two costing methods. Very old costing methods, सबसे पुराने, before ABC costing came, before life cycle costing came, these were only the costing methods which were used by all. Whatever is the cost, just divided by number of people, and then the cost is levied. Like suppose in this absorption costing or traditional costing method, what do they used to do is nothing but, suppose there are indirect costs like factory rent, supervisor salary, something like that. What do they used to do is nothing but just divide it by the number of units, you'll get it per unit, or just absorb it directly. Whereas with the activity based costing, what used to happen is nothing but, what is the cause and effect relationship between the cost element and the cost. Understand the cause and effect relationship between the two, and accordingly absorb that cost with it. Now the best example which I would give for a traditional costing versus a modern costing is that, suppose there is a big mall. I have given this examination all the time. Suppose there is a big mall. You can name it. Suppose I name it Dubai Mall, because I've been there many times. Sorry. Now suppose there are 500 malls in here, 500 shops in here. Sorry, 500 shops are there in here, and the cost of maintenance. There is one cost which is called maintenance, and the cost of maintenance is suppose $100,000, $100,000 per month. Now, if I'm using traditional costing, what I'll do is nothing but this 100,000, I'll divide it by 500, and I'll levy it on all the shops. Whether the shop is small, big, doesn't matter. I'll just levy it on all the shops. Suppose I'm using activity based costing. What I'll do is nothing but I'll look out for what is the floor space used. What I'll look out for, I'll look out for how much is the floor space used, and according to the floor space used by people or that particular shop. Suppose if it is a bigger shop, there will be more cost levied on it. If it is a smaller shop, there will be less maintenance cost levied on it. I hope that this sums up the example for you to understand the difference between traditional costing and modern costing. All right, then in the details anyhow, we'll be going it in the upcoming chapters. We'll be going there in details, and also the test your understanding which we are going to solve it. I hope that there is a test your understanding. No, there is not. Illustration is there. Again, this illustration we are going to do it in the next video. Make sure that you look out for it for sure. I don't know why I'm coughing. Maybe it's because of regular just going on telling. So for this, if suppose you have watched this video till here, I hope that I've covered all things, but this is just a cost element, cost card actually. As I said you, that it starts with the direct material, then direct labor, it becomes your prime cost, and then goes on towards variable, fixed cost. You have your full standard cost ready. Moving forward, there's an illustration. We'll be doing this illustration in the next one. In fact, for this illustration to be done, what I want is nothing but you guys need to complete it yourself, and then we'll be doing it because there are only few days left for your examination. Few days only. Try doing it. Put the pen on paper, not pen on paper actually. Put your hand on the keyboard and go open an Excel sheet and solve it. Because if you solve it, then more practice, much better for you. All right. Then comes under and over absorption. Now, this overhead under and over absorption will happen once there is a predetermined overhead rate calculated before. Now, when there's a predetermined overhead rate which is calculated before for absorbing of the overheads, there are chances that the actual overheads may be sometimes more than the predetermined rate, and sometimes it may be less. Now, when it is more or less, in short, what is happening is nothing but under or over absorbed overheads is happening. Now, when there is under and over absorbed overheads, then there will be a treatment to be done to that under or over absorbed overhead, that excess or that deficit. There should be a treatment for it. Now, what treatment for it is nothing but, as you can see in here in this chapter, I don't think so there is a brief explanation for it. As you can see in here, actual overhead incurred minus absorbed overhead is equals to under or overhead absorbed. That's it. They have given in here. And then there is a illustration which we are going to do it in the next session, because I want you guys to do it at first. I'm not going to do it at first. You are going to do it at first. Then going on towards marginal costing. First of all, understand that what is the meaning of marginal cost. Marginal is nothing but one thing in addition, one thing in additional. So marginal cost is nothing but the additional cost incurred for the next unit, additional cost incurred for the next unit. So marginal costing goes on with this. It is also called variable costing. As you can see in here, is an accounting system which in which variable costs are charged to cost units, the period written off, etc., etc. You guys can go through it, but make sure that you complete all the test understandings and illustrations which are given below and above here also. Even here there are test understandings which is to be split on accordingly. See what happens in this. Let me just open this up and show this to you. Okay, here am I having, no, not here, one second. Now, if suppose this is an income statement, suppose this is an income statement. In this income statement, what we do normally is nothing but we take up starting with what is the sales. After the sales, whatever the amount is, you deduct your variable cost. What do you deduct is nothing but your variable cost. Once you deduct your variable cost, you will get your contribution. Now, why is this called contribution? Is nothing but this is the amount which you are going to contribute towards the fixed cost which is levied, or towards the fixed cost which is levied. But now we are not going to get into the fixed cost. What you have to do is nothing but, okay, let me just cancel this. What you have to do is nothing but you have your selling price, you have your direct material and labor, which is both equal to your variable cost, and then you have your variable cost per unit. you have to have this put down in this level of activity in a different manner, which you guys need to do it, and I'm going to do it in the next video. All right. Okay, those though there are the solutions, I'm not going to show you right now. You guys need to do it now. This advantages and disadvantages of absorption costing. See, understand this. In the absorption costing, you will be taking the complete cost of the product, including the fixed overheads, or including the fixed cost related to the production. You're going to take it into the cost of the product. Whereas in variable costing or marginal costing, you are not going to take the fixed production cost. Fixed production cost will not be taken into consideration for the product cost. It will be charged towards the period cost. Same goes over here in the absorption costing. The all cost will be taken into the product cost. Only the non-production cost will be taken in the period cost. All right. I hope you guys are getting the difference. If you're not getting the difference, let me just explain it to you once again. Why is it? One second. Where is this? Yeah, here. Understand this. There is two types of cost. One is the product cost. One is the product cost, and another one is the period cost. All right, product cost and the period cost. Now in this, there are production overheads, production cost, and there are non-production cost. Now what happens is, when I'm using absorption costing, complete production cost, all the production costs related to the product will go on towards the product cost. You will be taking into the consideration of product cost, and that will be an inventoriable cost, whereas all the non-production cost will go towards the period cost. Understood? Good, fine. Now talking about the marginal costing, or variable costing, you can also call it. What happens is, what cost you're going to take in the product cost is nothing but all the cost related towards the production, except fixed production cost will not be taken in here in the product cost. It will be taken under the period cost, and the next all remaining non-production cost will go towards the period cost only. All right, I hope that this is clear to you students, and those are coming in towards the advantages, disadvantages. What happens in absorption costing is nothing but the inventory goes up. Inventory goes up, what happens is nothing but your profit also goes up. Though it is not good for you, your profit also goes up. Let me just clear or finish this off now. Moving forward, marginal costing also they have given up some these. This is more of for your internal reporting purposes. Marginal costing will be used more, because for your internal reporting purposes, you can take off and remove all those non-cost or non-relevant things out of the picture, so that you can have a proper calculation. You can remove that sunk cost and all. Sunk cost is nothing but that fixed cost, and have a proper calculation. All right, so I guess we are done. Yes, we are done with this chapter's explanation only. We are still pending with the problems. We are still pending with all these problems, and I want you guys to do those problems at the earliest. Let me just stop this. Where is the, so that once we finish this, what we can do is nothing but, once you guys finish the test your understandings, once you guys finish the illustrations which are done in this chapter, the thing is you're done with that chapter, and then we can go towards the second and third chapters together. Now when we do that, then again we'll have test your understandings there it will be more of theoretical based. We'll be framing answers there, so we'll be like, one-on-one, though it is, on YouTube, but still it will be more of like one-on-one, doing and finishing it off. The target is to finish performance management in June 2021. And if you also have that target, then subscribe to this channel, share this video, so that other students can also do it, and look forward for the upcoming video next. All right. Thank you very much. Thank you very much for joining.